Hey guys, John Paulomy here, Actionable Intelligence. I get a lot of email and messages, and a couple people have asked me recently, what's my investing methodology? How do I go about picking stocks? So I thought that I would spend some time kind of going over the way that I think about things, the way I put my work in, and what I consider when I'm looking for actionable speculations or investments. So my starting points, these are just some bullet points, and I'll go into more in depth further into the video. But basically, I go into things, when I look at things, with a massive amount of skepticism of the status quo. I think, especially nowadays, our institutions are very devalued, they are in decline, and there's a lot of, shall I say, people seeking their own self-interest. So I'm always, specifically to companies, let's just be honest, especially in some of the industries that we deal in, the resource markets, people just, you have to have a lot of skepticism. The media is another thing. They don't fully report things correctly. They have a bias. Whether you want to realize that or not, it's true for certain agendas. People in corporate positions and CEOs and corporate officers, obviously they're incentivized sometimes incorrectly. Their incentives are not aligned with shareholders all the time. So I think you really have to have a lot of skepticism going into. That's what I have, at least. And I have a curious mind, so I really want to understand what's really going on. The other thing I think about when I start into this process is I have no advantages in the regular market, therefore I must be a contrarian. Now, a contrarian isn't somebody, we have people like Peter Schiff out there and Harry Dent and all these people that are like perma bears, and we also have perma bulls. I mean, no amount of facts, no amount of reality will dissuade them from their view. That's not contrarianism, just to be on the other side of the canoe just because. I mean, yes, the market is overvalued, for example. I'll give you an example. Market is overvalued right now, but it will continue to move higher until it doesn't move higher. And people have left a lot of money on the table saying that we're going to have this, Mad Max crash. That's not contrarianism. That's just being bullheaded and stubborn. The other thing I look for when I go into looking for speculations and investments is I try to find the premise that is wrong, then I bet against it. I'll go into that more in depth later on in the video. I also want to try to dig into underfollowed areas of the market. That kind of ties back to the second bullet point where, you have no advantage in the regular market. Another thing that I incorporate is to understand cyclicality and make it your friend. If you don't, especially in a lot of the markets that I play in where I do have an advantage, they're very highly cyclical markets. You really must understand cyclicality. You cannot just buy and hold some of these things through down cycles. You'll get wiped out. Some of these things will go down 80 or 90% in a down cycle, and then they'll go up 1,000 or 2,000% in an up cycle. You want to catch the upswing. You don't just hold these things like it's Duke Energy stock and you're clipping coupons, getting your dividend. That's not what these are in a lot of areas that we play in. And then the last thing is something that I find very important and people gloss over. And I just say read, and then read some more. Charlie Munger gave a speech to a graduating class of Stanford MBAs, and one of the graduating MBAs asked him, Mr. Munger, what is your advice, key to success that you've had in the markets? And he said that he reads 500 pages a day. I think that's good advice, and I'll get into that also, why you must have an information advantage and how you can create one. So the first thing is skepticism. I have a lot of skepticism of what I am told and shown because in my worldview, most people have an agenda. I'm not going to get into my personal beliefs, but I believe this is a fallen world. Most people are fallen people, and I kind of go back to what Mark Twain said. A lot of people think this is cynical, but I kind of like this quote. He said that 999 men out of 1,000 are bastards. I think that that's true. Cui bono, who benefits? People mostly are trying to help themselves, not you. So you need to look at when somebody says something or does something, especially in these corporate environments when you're researching companies or investments, it's like, who's going to benefit from this action this person's taking? How is this person incentivized? How is this person as a corporate officer acting? Not all of them, most of them don't have your benefits uh, at the top of their agenda. You have to understand that a lot of these politicians, the media, corporate CEOs, this is dog eat dog, and to rise to the upper ranks in some of these things, you have to be a sociopath or close to it. It's just some of the things that you have to do, to survive or to gain those footholds. So you really need to understand what you're dealing with. These people are not everybody, of course. It's not not going to say everybody, but you really have to pay attention to what's going on. I mean, people are shocked that politicians lie. Well, why wouldn't they? That's what they have to do. So that's what they do. If you're somebody that tells the truth, people don't want to hear the truth. People want to be lied to. You have to. This is another bias you have to get out of here. You don't look for people to affirm what you already believe. You have to look at the facts for what they are and not how you want them to be. That is the major thing that people miss. They have a worldview that they've created, which is fine. Everybody has a philosophical worldview. Not many people have a philosophical anchor. That's a whole other discussion. But then they pursue their endeavors in life with this view that they've created that may not balance itself with reality. And if you're investing money and you're not looking at the facts, that's not going to work out very well. So you really need to look at things for what they are and what these people tell you. I've said this many times. I encourage people, especially people that are invested or speculating in the resource markets, to go to one of these investment conferences. I say that with italics with my fingers. Gatherings in Vancouver where they have a lot of junior mining companies, and just talk to some of the people. I mean, you'll come out of there with a 3-foot stack of brochures and you'll be like, every one of these companies, man, is getting, well, that's not how it works. Maybe one property out of 1,000 or 2,000 or 3,000 ever becomes a working, profitable mine. So everybody there's got a story. What's their real agenda? I mean, you got to look at these things. And like I said here, people lie all the time, especially when money is involved. I mean, if you don't understand this, then you're living in a fantasy world, and you need to take that into consideration. You need to, it's not everybody, but people do lie all the time, for all kinds of reasons. Now, let's talk about market advantages. You have to have an advantage. It's just like when I use these poker analogies. If I'm playing Texas Hold'em and I'm dealt I'm the last person before the blinds, and I'm dealt 2-8 offsuit. You fold that hand; it's not playable. I have no advantage with that hand. So you have to understand and try to gain an advantage over everybody else. You're not going to have an advantage, but researching Apple, Microsoft, or Netflix. I mean, all the investment banks, they have, these things have dozens and dozens of analysts that they do nothing all day but parse and look at every piece of information. A lot of them have biases because they do investment banking work with these companies. You have no advantage there in the general market. That's why when people ask me, where do I think the market's going? I have no idea, and I have no interest in even trying to think about it. I have no advantage there. Trend following is probably your best bet. If you do not want to do the work to try to gain an advantage, your best bet is just to put your money into like a Vanguard low cost S&P index fund and just leave it there for the next 50 years. You'll probably do all right. But if you want to try to gain an advantage, you're not going to have it by analyzing Netflix or messing around with, all these new IPOs. You just have no advantage there. So, what can you possibly add that isn't already known to these companies? I mean, I read an article the other day. There's analysts that fly drones over Target and Walmart parking lots trying to get a jump on same store sales so that they can trade the, upcoming quarter of, Walmart stock or Target stock. You're not going to have an advantage there, guys. I'll give an example of a market where you can have an advantage. Uranium, the entire publicly traded uranium sector has an $8 billion market cap. That means all of the publicly traded 60 or so, 50 to 60 or so publicly traded uranium companies, you could buy the whole thing theoretically for $8 billion. There's no institutional coverage there. Why? First of all, there's no way for the institutions to make money. They can't get money in there. It's ignored. No one cares about it. Yet nuclear power is 20% of the United States electrical grid, and it's about 10%, 11% of the world's electrical grid. No one cares about it. You can definitely have an advantage there because no one's following it. You can have an information edge. Okay? I'm a big fan of Don Cox. I've talked about him before. He's a historian by training, but he was a big-time investment advisor. He used to have a weekly call that I was able to sneak on for his clients. He was very well informed, and I remember him saying, don't invest in the page one story. Everyone already knows what's on the headline. It's already been factored into the pricing of the securities. You're not gonna pick up the paper one day and say, XYZ company is got a breakthrough. It's already known. It's already priced in, guys. What you have to do is look at the page 14 story in the back of the paper that no one reads and no one cares about, and find the story that's moving to page 1. That's where your information edge comes. Going back to uranium, we understand, or we think we do, the supply-demand dynamic. That's an advantage we have. We have the ability to get money in because we're not running billions of dollars in a hedge fund. We have the ability to wait. That gives us an advantage. That's an example of how you gain a market advantage. That's your ace-king suited when you're dealt that. Your percentages go up a lot higher when you're playing ace-king suited over 2-8 unsuited. Okay, find the incorrect premise. This is very important. This is a George Soros way of thinking, how he makes his money. And this is what's really difficult. This is what I do. As opposed, I do a lot of reading and thinking. I don't just pull stuff out of my butt. It's like, okay, fortunes have been made by identifying an incorrect premise or idea held by the majority and then betting against it. I'll give you some examples of what I think are some incorrect premises or ideas, not necessarily actionable, but just I'm giving you some ideas of what I'm talking about here. Like Malthusians throughout history. We've had people that are still today given credence that wrote books about the population bomb or the world was going to run out of food or run out of resources. Now, it's conceivable, I guess, on a finite ball that you can't have infinite exponential growth. I get that, but I don't know what the timing of that is. Is that 20 years from now or is that 10,000 years from now? Because it seems, if you look at the charts for commodities and for example, for the real pricing of commodities, they continue to get cheaper over the decades, not more expensive, because man is able to find, obviously picks the lower, easy grabbed fruit, and then as prices go up or spike or needs go up, they go and develop technologies and efficiencies to further gather the resources that they need. So they've been wrong. And so betting along that has been wrong. This whole thing around man-made climate change, I think it's an incorrect premise and idea. And I think that I have other ideas on that. That's just my view. And the reason I say that is I go back to my other slide about being a skeptic. I'm not being a skeptic because I'm in the tank for the fossil fuel companies. I want clean air and water. I don't want to have a polluted world, okay? But I don't believe with the people that are on the forefront of this, I just don't trust their agenda. Fat ass Al Gore, that blubber, he's become a centimillionaire on this whole thing. The UN, all those bureaucrats up there eating caviar and drinking champagne, the masters of the universe that want us to give up our national identities and have a one world government. Yeah, I have some skepticism. A 16-year-old autistic dropout? No, I'm sorry, guys. I'm going to take the other side of that bet. The demise of fossil fuels, the idea that we're going to run the world on 100% renewable in any near-term time frame is impossible. I'll give you an example. Half of a barrel of oil is used for transport. The other half is used for all the products in your house that you use, plastics, dyes, paints, lipstick, medicines, all kinds of stuff. I could go on for 4 hours of all the derivatives of the other half of a barrel of petroleum that's used for modern conveniences. That's never even discussed because, that's a premise that's incorrect. And in fact, even if you do increase renewables, you're going to see an increase in the use of petroleum. You still don't have an answer for jet travel, trains, ships. They're talking about it, but there's nothing on the near-term horizon. And as the population grows, which is 80 million people a year, what are you going to do about mass agriculture? I've never seen a battery-operated 8630 John Deere yet. Maybe it's coming. I don't know. But that's an incorrect premise. Another incorrect premise, cholesterol causes heart disease. No, it doesn't. Cholesterol is necessary. It's produced internally in your body. You also can consume it. What happens, what we're finding now, it seems to be the contrarian view, is that, we had the USDA, because it had been lobbied by farmers, to have this, food pyramid with all these grains at the top. Eating carbohydrates causes inflammation in your system. That inflammation creates scar tissue. That's what causes, and then the cholesterol globs up on those inflammations and that scar tissue. That's what we seem to be finding. Another incorrect premise. Putin's Russia is the new Soviet Union. No, it's not. It's a declining population area that's trying to hold on to its, former greatness. I will tell you this: most people don't know this. The Russian stock market was up over 30% last year. It's still one of the most undervalued stock markets in the world because CNN told you it's a new Soviet Union. You won't touch it. You can buy stocks there that are traded at 3 times earnings and yielding 8 or 9%. And the dividends have landed in my account. No one's confiscated my dividends. So, people that make these type of comments are not informed. They don't speak Russian. They've never been to Russia. They don't know any Russians. They don't know Russian history, but yet they feel compelled to give an opinion on it. It's an incorrect premise. Is it a perfect place? Shangri-La? No. But it's not what people think. That gives you an advantage. Here's another big one. Equality is a virtue. I don't believe it is. The last 100 years, there are many men that tried to create equal societies. They killed 100 million people trying to do that. What about justice as a virtue? When do we think about that? You get what you deserve in life. You try to create equality of outcome, well, you have to murder a lot of people because people aren't equal. Here's another one. People can live at the expense of their neighbor via the ballot box. They think that they can just go to the ballot box and vote other people's wealth. Doesn't work. People respond to incentives. If you steal from them via the ballot box through whatever, they will stop producing. That's the norm around the world. We've seen it over and over. Yet this is being promulgated here in the U.S. I'm not saying every one of these is actionable for investment. I'm trying to tell you these are some of the incorrect premises that I have identified. I may be wrong on some of these. Okay? Very well could be. I could have some of my own internal biases affecting me. I have a very high hatred of statism, communists, socialists, and these type of people because they have murdered more people than anybody else. So I have a certain bias against it. But maybe it'll work this time. Anything's possible. So then, another thing that I take into consideration is you understand cyclicality. Like I said, a lot of the markets that I work in, that I can gain an advantage in, are cyclical markets. They trade in cycles of undersupply and oversupply. This is very easy to understand because you're dealing with human nature again. This comes from wisdom. This comes from history. This comes from understanding previous cycles. I'll give you an example. I've been talking a lot on the videos and in my newsletter about shipping. I didn't come up with the idea. It was people that are smarter than me that turned me on to it, and then I started investigating it, and I was like, yeah, this makes sense. So you have what happens in shipping, and shipping's a very large industry with about 8 or 9 different segments, subsectors. So it's not one monolithic trade. But what we've seen is 10-year bear market in shipping. The rates have been down. They can't make money. A lot of ships have been going to scrap. People aren't building new ships because people aren't going to be able to get capital to bring new capacity on when the current capacity can't make money. So entropy is in effect. Things wear out. things get to their end of their useful life, they scrap them. I've shown the video where they beach these things in Bangladesh and they shipbreak them. And you're not replacing ships, okay? You're not replacing them because, like I said, there's no demand. The demand is low, therefore rates are low. Then you get to a certain point where enough supply is destroyed. You still have slight growth over time. You have economic growth, so there is slight growth. Then you get into a situation where the capacity is not enough to meet the supply. Then you start seeing rates go up. That's what we're starting to see, especially like in tankers. Now, you have some contributing factors to the recent spike in rates. What are they? Number one, especially in crude tankers, you had the Trump administration put sanctions on the Chinese national ship company that was transporting Iranian crude with some of their tankers. So they are banned. No one can use those tankers. You just took 50 or 60 tankers off the market. That creates an artificial supply deficit. Number one. Number two, you have the IMO, International Maritime Organization 2020 rules on the switch from high sulfur fuel oil to low sulfur fuel oil. This is causing distortions in the market. This is what we like to see as speculators. Okay, so now we have all of these factors coming together to create a new upcycle in shipping, especially tankers. Now, I suggest to you, just based on some of the information that I've been looking at, that some of this will spread to some other sectors just because of the undersupply that's in some of the other sectors of the shipping industry. But right now, the focus is on tankers. Now, indubitably, what will happen is rates will rise, and they have risen magnificently, as a matter of fact. And what will happen is that rates will become high, cash flows will surge at these shipping companies, and they will do like they always do. They will go out and start ordering more ships. You will then saturate the demand for ships. You will create more ships than are needed. This is what has happened in previous cycles. And then guess what? Rates will collapse, and then you go through another 10 or 15 years where these things don't make any money. That's what I'm saying about understanding cyclicality and making it your friend. Understanding this opens up entire sectors that have tremendous opportunity for speculating. Based on the research I've done, on previous shipping cycles, we've seen some of these stocks go up 10, 20, 50 times in value. Not 50%, 50 times. Now, I'm not suggesting that's going to happen, but I'm just telling you that's the potential that can happen. That's what can happen in all of these sectors that have cyclicality. That's why I'm such a big fan of the resource markets and why I'm such a big fan of cyclical markets, because if you can understand and catch the wave, you will make a tremendous amount of money. And I will tell you that institutions stay clear of many of these industries. They don't like them. The stories aren't good. They can't tell them. And they're usually not big enough to get big amounts of money into. But I will assure you that once these things get moving, and the algos are already picking up on it, so that's what you're going to see. Things are in an uptrend. You will start to see increasing over the Q4 and Q1 reports early next year. The cash flows will start hitting the balance sheets and the reports, and then everybody's going to be bullish shipping. I mean, there was an article in the Barron's last week. Peter Lynch, the famous Magellan fund manager, he's bullish on shipping. So cyclicality, I want to understand it. Okay, this goes back to what we said, what Charlie Munger said: read, and then read some more. And I'm not talking about reading some detective novel. I'm talking about reading a whole bunch of subjects: history, economics, banking, welding, chemistry, whatever interests you. You have to be a curious person. You have to create a bank of information in your mind. Okay? If you're going to get into looking at gold mining, you really should understand the different types of placer mining, hard rock mining, different types of mining, the economics of each of them, what makes a good mine, what makes a bad mine. You can't just randomly just buy stuff based on what somebody tells you at a conference in Vancouver. That's ridiculous. So you have to be an informed person. That takes work. This is where we start getting into the problems of why most people aren't successful in the markets, because they're not willing to work. It's like any other endeavor that you're going to involve yourself in. Okay? If you want to be successful, you have to do the work. There's no easy way out. As a general rule, the most successful man in life is the man who has the best information. If you're going to, I get questions all the time on Quora. I like to go on there. I try to, use it as answer questions there, to use it as a conduit for get people interested in my newsletter and my work, to watch these videos, for example. And I get questions. I mean, I don't mean, I'm not talking down, but it'll be like, how do you invest in the stock market? Well, this is basic questions. If you don't know how to open a brokerage account, if you don't understand how the markets work, you have no business being involved in that. You are going to lose money. I guarantee it. I mean, what did Doyle Brunson said? Or I think it was Doyle Brunson or one of these other professional card players. If you sit down at a poker table and you can't identify who the schmuck is or who the fish is within the first 10 minutes, it's you. You're the sucker. It's the same thing. These people constantly will ask me this. Where should I got a windfall of $100,000. Where should I put it? I mean, that's not a good way to look at things. And if you are that person, you need to educate yourself. You put your money in a passbook savings account and start educating yourself. Identify who the best investors and speculators in the world have ever been. You have access to all their writings. These people make videos. Watch them. Understand what they're talking about. Understand how they've been successful over time. It's real simple, but it's work, and people don't like to do that. I know it's not interesting for most people. Woodworking's not interesting for me, so I don't pursue it. Some people love it. That's their hobby. I don't build model trains. Some people get off on this stuff. More power to them. I actually like reading, becoming more informed. I have a thirst for knowledge. I guess I'm lucky in that respect. But if you are not informed, you are not going to be able to develop ideas that give you an advantage over these PhDs and these AIs and all the algos that are sitting up there in New York. Stanley Druckenmiller, Ray Dalio, all these people. That's what they do all day. They think about this stuff all day. You have no advantage trading Netflix against them. That doesn't mean they're always right, but they've been successful. History is very important, as human nature does not change. If you study history, you will notice the same mistakes being made over and over again. There's books out there. I think it was one by Charles McKay just about bubbles and Ponzi's. I mean, the same psychology and greed and desire for easy money doesn't change through the generations. It's the same. It's easy to identify. It's not hard. The same rationalizations are made for stupid ideas and acts. You should read some of When Money Dies is a good book. It's about the Weimar inflation. You will see some of the same justifications being made during the hyperinflation in Germany in the 1920s that you see people like Ben Bernanke and the current Fed chairman making. Some of the same ideas. It's just scale. And it hasn't gotten away from the Fed yet. So I spend a lot of time thinking on an idea and looking for holes and biases in my thinking before I act. Okay? It's what I call red teaming. It's a military term. Like when you're going to do an invasion of France from Great Britain, like they did in World War II, they used to have war games to see where were the holes in the idea. Where were some of the things? They get their best minds, are going to say, poke holes in the idea. Most people don't like to do that. Most people come to an idea and then they'll go and look for affirmation for their idea. They'll look for somebody to give them affirmation, say, yeah, I agree with you. And that way they get confirmation. And it's confirmation bias. No, if somebody tells you, I'll give you a perfect example. I was called during the Bitcoin craze. It went up to, and this is around when it was about 18 grand. And a group of people called me. One of the people I knew very well, he set up a conference call and he respected my opinion. He said, can you talk to these guys about Bitcoin? And they were all jazzed up for it, including the person that called me. And I told them, the simple fact that you people that have no knowledge and no advantage and no idea about investing are calling me about Bitcoin when it's 18,000 tells me that's the top. And they got offended. I said, don't get offended. What you should be, and I gave them some ideas about some undervalued ideas and how you need to buy undervalued things that are out of favor and wait for them to mean revert. There was no interest in even talking. The conversation was brought right back to Bitcoin and how to evade taxes from the gains they were going to have and all these wacky ideas. It was very frustrating me, but it was a very good learning experience. I saw the same thing many times in other markets. Okay. And that's kind of like, where people make their mistakes. They have a bias. They want to be confirmed by someone. And when they get that confirmation, they run for it. They run with it. Some of these people were buying Bitcoin with their credit cards when it was still allowed. It's not recovered to its old price. Maybe it will. I do not know. There's a lot of opportunity cost there. When you're paying 20% on a $20,000 credit card balance, now it's starting to get painful. This comes down to be successful, you have to do the work, and most people don't want to do it. So how do I get to an actionable event and where I actually buy something or I find a security that I think is investable? Well, after I identify an idea that I believe I understand fairly well and is being misunderstood or mispriced, I then look for a tradable vehicle. Okay, I look for a stock or an ETF or something that I can use to possibly take advantage. Now, sometimes you can't find a good way to take advantage of something. That's just the way it is. Um, I don't care where it is. If it's tradable, I will consider it. So, give me an example, like Russian stocks. I use the Russian ETF. You could buy some things on the pink sheets. Now, interactive brokers, you can actually buy directly on the Russian exchanges. You don't have to go through ETFs. You can buy individual stocks. That's just an example. I'm not suggesting that people should do that. I'm just saying I'm giving an example. Then what I do, and this is very important, this is what most people do not do. I document my thesis for why I entered a trade and then periodically check my thesis, not the price, the thesis, to make sure it is still correct. If not, I will sell it, even at a loss. You must be cautious. Let me go back to that statement. You got to do that, guys. If you have a reason you bought something and the reason changes, not the price. The price could go down because the market may not recognize, what you recognize, and you may be wrong. I'm wrong all the time. Something that you didn't consider or something changes or whatever. A lot of these companies are not in good positions specifically because they're in bad businesses. Some of them don't turn around, or their industry may turn around and they don't make it because they don't have enough cash. All kinds of things can happen. So you got to be prepared to sell if the thesis changes. Now, the thing you have to be cautious of is thesis creep and internal biases. What's thesis creep? That's when you buy something and you say, okay, let's give an example of uranium. We understand the supply-demand imbalance. Let's say that Jethro's walking through Utah and stumbles over a rock and somehow finds this near-surface, easily mineable, easily permittable uranium mine that he can extract the uranium at, $3 a pound. His all-in costs are $5 a pound, and there's 1 billion pounds there. Well, I can tell you that there won't probably be a recovery in the market and the price because you found it easily exploitable. Or if you had a massive, another Chernobyl or Fukushima, it would set back the nuclear industry for another generation. So you wouldn't just change your thesis and say, well, you just get out. You have to. Or, if a company is doing one thing and then and you bought it because it was doing business X, and then it's that business isn't working out, so it pivots to another business. Well, that's not why you bought that particular business. You got to remember something. When you're a shareholder of these businesses or these companies, you're a part owner of the business. You need to. That's how I approach it. So this has been a quick and dirty. Let's just go back and review. These are my starting points again. I have a massive amount of skepticism of the status quo. I guess this is how I am, or just my experience. I understand that I have no advantages in the regular market, therefore I must be a contrarian. And what a contrarian isn't somebody that just takes the other side just to take it. It's to take a reasonable contrarian view based on facts, not on your internal biases, like a lot of these perma bulls and perma bears. No amount of facts will ever change their mind. They have it in their mind, in their head, and yet they still get, hearings. You cannot be that person. Stop clock is right twice a day, but it's useless the rest of the day. Find the premise that is wrong, then bet against it, and bet heavily against it. That's how you make tremendous amounts of wealth. How do you do that? You have to dig into underfollowed arrows of the market. You have to understand cyclicality and make it your friend, because the industries that are mostly underfollowed, a lot of them are cyclical in nature. And then you have to read and read some more. You have to be informed. You have to know what's going on. You have to have an information advantage. And you don't have Bud Fox out there going around getting you inside information at Blue Star Airways. You have to There's a tremendous amount of information that's available. There's a tremendous amount of history that's been documented, whether it's financial, whether it's just typical human nature, psychology. You have to avail yourself of this. You have to understand it. If you're just, flipping baseball cards, you're not, if you're treating this like pitching pennies, or somebody, your ex-brother-in-law gave you a hot tip at Christmas dinner, you're not going to do well. So that's really how I do it. I don't know if that's helpful for people. I know that some of the things I say don't rub people the wrong way. I mean, there's people that aren't going to like some of these ideas and the views that I have on them. That's what makes a market. Everybody has different views. Somebody's going to be right and somebody's going to be wrong. These are just examples. This isn't, here to aggravate people. If you don't agree, then you can take the other side. It's that simple. So that's my investing methodology, basically in a short half hour. I hope it was helpful, like I said. And, if you want any more videos or questions, I'm happy to make videos that are reasonable, that make sense. And I think that a large amount of people will get value from. So thanks for listening, guys. Appreciate the support. And we'll talk to you next time. Thank you.